In today's video, I'm showing you something that completely changed my life. It was the final missing piece to trading that actually made everything work, and in today's video I'm going to show you exactly that. And before we get into it, let me show you some results that it actually got me. Okay, so as you can see, this is the last month. Basically I made $21.5 thousand, and this month so far I've actually made $70.2 thousand, and it's also December. Also guys, if you want to check out other YouTube channel where I basically post all of the trade recaps and most of the live trading sessions, so if you actually want to watch me trade this strategy that I'm about to teach you, just go to this channel and you're going to see my live recordings of my live sessions. So I can show you this once again, and I can also refresh it so you can see my broker is connected and everything is there and legit. So let's get into it. Okay, so we are on the chart. So what I'm gonna do right now on the chart is walk you through the exact steps and basically what the thing is that actually made me profitable. So let's start first with all of the steps that this strategy actually requires. So the first step, basically the step number one we can call it, we are going to mark out all the liquidity on the chart. So if you look on the chart right now, we are on the 15-minute time frame, and we can see that we basically made this kind of pattern. We went to the upside, we went to the downside, to the upside again, and came back to the downside. So we made some kind of simple highs and lows in the market that we can mark out like this. So we always want to mark out liquidity. Why is that? Because market always needs to claim some kind of liquidity, manipulate some kind of liquidity so we can enter the market. Because if the market doesn't take any liquidity and we get into the market, we are going to become liquidity. So that's very important that we always mark out liquidity and wait for it. Second thing that we want to look for is imbalances in the market. So we want to look somewhere that we can react from and basically get into the trade. So how do I mark that? So you can see we have these three candles right here. So we have this one, and this one, and you can see the middle candle, the second candle, is basically so powerful that it left this open space in between it. So I want to mark this out as our imbalance. So why do I want to see the imbalance? Because I want to see later on market either sweeping to the upside or to the downside and basically sweeping the liquidity and tapping into the imbalance. So it's pretty simple. And if I do the same for the upside, we can see we have an imbalance right here, and you can see we almost swept the whole imbalance. But if we basically sweep like this, if this happens in the market and we sweep to the upside like this is still respecting the imbalance because we didn't actually close. If this happens on the 15-minute time frame, then this imbalance right here is no longer valid. And the thing that actually I realized that will just make me profitable so much sooner, as I said to you guys, is that you guys need to come every single day to the market and execute this strategy. Because I always thought that strategies need to be so complicated, crazy, like mathematical, I don't know, unexplainable. But actually when I came to realization that trading is actually simple and that you need to have a model that's easy executable and that you can basically come to the market every single day and execute without any problems, that is what is actually going to get you profitable. Because there is never going to be any kind of mistakes or anything, and you are always going to be very easy to execute everything. So what do I do right now when we marked out liquidity and fair value gaps? We go down to the 1-minute time frame. So I'm on the 1-minute time frame right now, and if I do this, we can basically wait for one side to get swept. So as I told you guys, we always wait for one side to get swept. So right now market is consolidating, kind of staying in the middle, and we got the sweep to the downside. So let's go to the exact moment where we had the sweep. So I'm going to delete this, and I'm going to also move this so we don't have that noise on the chart. Now this is going to be the actual key part of the strategy. So you gotta like listen to me very careful right now. So the thing that we are going to look at is 4 different time frames. So the time frame we are going to look for the entry part is 1-minute time frame, 2-minute time frame, 3-minute time frame, and 5-minute time frame. So remember these 4 time frames, and I'm gonna explain you right now how do we even use them in the market. It's very simple, trust me. So first of all, we are on the 1-minute time frame, and if we look for the fair value gaps in the market, we can see this one and then this one right here. What is the point of entering the market with the right time frame? We need to look at the biggest time frame that has a fair value gap right here. So if we are on the 1 minute right now, we have two fair value gaps. If we go to the 2 minute, we can also see that we have two fair value gaps, one right here and one right here. So if you go to the 3 minute time frame, let's see if we do have fair value gaps here, and we can see that we have only one big fair value gap right here, and the last time frame that we have to check for the fair value gaps is 5 minute time frame, and you can see that we actually have this fair value gap right there. So that means that we are going to enter off of the 5 minute time frame. So it's always going to be the biggest time frame that has a fair value gap. So the exact thing that we are going to look for is the closure above this fair value gap. So we want to see market come and close with a body like this. So if the body closure is like this, we don't enter the market. So let's see how does that actually look on the chart. So we went to the downside for a little bit, and let's see what happens. We leave another fair value gap. This is really important. So this was the fair value gap that we waited to enter off of like this, but since market made a new fair value gap on the 5 minute chart, we go and mark out this one. Let's see if we are going to get the entry right now, and there it is. We have an entry, so we are going to enter the market like this. Stop loss below the body or the wick like this. I always put it under the wick or the body. And then the second thing is to target the opposite liquidity on the 50-minute time frame. So it's very simple. But one of the key things that you guys need to do is, you can see that we have this fair value gap right here. And if it was, let's say, the fair value gap right here or something like that, we want to put our stop loss to entry. So the thing that we are going to do is we are going to go break even on these fair value gaps. So whatever fair value gap we tap into to the upside, we are going to go break even on them. So let's see what the market is actually going to do. So we came close to the fair value gap, still did not tap into it. Now we retested this fair value gap down here, which is not important, but it's cool to see how the fair value gaps are reacting. And then we are going clearly to the upside, and there is our TP. So I always like to say, if you risk 1% on, let's say, $100,000 funded account, this would be a $2.3 thousand win. So very nice trade, and it only lasted like half an hour. Okay, but right now, since we already had one trade to the upside, now we have swept another point of interest, which is this liquidity on the 50 minutes. So what we can do is look for some kind of opposite direction trades. So if I move this out of the way like this, I'm gonna remove this so it doesn't bother us, and let's, for example, try to see if we get any kind of opportunity. So for right now, we are still on the 5 minute and we see this fair value gap. So we don't even need to go on the lower time frame, because we know that on the 5 minute there is a huge fair value gap. So let's see what the market is going to do. Market almost inversed it, so this was really close to actually inversing it, but we are still not entering. So let's see what the market is going to do. So we are waiting. Market actually created a new fair value gap right here. So this is a new fair value gap, and let's see, it made another fair value gap right here. So we actually have an entry. So we actually entered the market right here, and stop loss above the candle wick or the candle body. For this example, since the fair value gap is so small, I like to give it just a bit more room, but they're just up on you if you want to do it in the live market or no. So what do? We target this liquidity to the downside. Let's see what happens. But the really important detail right here is that we have to go break even once we tap into this fair value gap. So let's see, is that going to cost us the trade, or is it going to save us? So we tapped into it and we returned back. So this would be a break even trade, and you can see what happened to the trade. Let's see, because this fair value gap reacted to the upside, so we went break even and we just got out at zero. So what do we do right now? We actually wait for another entry. So we still have this fair value gap right here, and if we get the inversion of that fair value gap, which we actually just did, we can enter off of it and basically put our stop loss on the wick, and we can target the bottom liquidity like this. And you can see, let's see how the trade is actually going to play out. So where do we right now go break even? Okay, so where do we actually right now go break even? So if we look to the left, we can see that only fair value gap is right here, only fair value gap that is left for us. What we can do is go break even on some kind of highs and lows in the market, and you can see that this right here is a nice low. You can see how it's pointed out, so we can go break even once we actually sweep that low. So let's see what happens. Market almost came to that low, but let's see what is market doing. So market actually just blasted through it and blasted through all the fair value gaps. So right here we are risk free like this, and we are just targeting this low at the bottom, and let's see if we do get it. And there it is. We hit 3.4 risk to reward. But I'm actually going to show you one more example which is going to be beneficial for you to actually win in the market. Also guys, if you like the video, if you like this concept, make sure to leave a like, subscribe, and like just comment something if you have any questions. And yeah, let's just get into another example. Okay, here's another day on the chart, and what I can see in the beginning is that we made quite a push to the upside, and we slowly retraced back to the downside. So what I want to look for is some kind of retest of some kind of fair value gap on the 15-minute time frame. And also I didn't know to you guys that this works on forex, indices, options, crypto. So whatever market you want to trade, this will work on it, and of course whatever time session you want to trade it in. So we can see that we want to actually get a sweep of this low down here, or basically this low down here, and a tap into this fair value gap. So let's see what will happen, if that will happen. So we are going to go on the 1 minute time frame to wait for it to happen, and let's see if that is going to happen. Okay, so market just quite dumped to the downside. So as I told you guys, from the 1 minute to 5 minute we have to check out what is the biggest time frame of all of them. So 1 minute we have a fair value gap, 2 minute we have a fair value gap too, so I'm gonna mark it like this. So let's see, 3 minute also has a fair value gap, a really big one like this. And let's see the 5 minute, and the 5 minute too has a fair value gap. So as I told you guys, the rule is to always go with the biggest time frame. So let's right now wait basically for the inversion of this fair value gap, and let's see if that is going to happen. Okay, so we entered the fair value gap. Let's see if we are going to inverse it, and there it is, beautiful inversion to the upside. So if I enter the market right here, stop loss right below the fair value gap, because I don't want to put it inside of fair value gap like this. I always like to put it below. And basically what do we target? We target the opposite liquidity to the upside, and let's just wait and see what happens. Okay, so if I fast forward the market, we also have to pinpoint what is our break-even point, and we can see a fair value gap right here with a high right here. So what do? We are going to go break even once we hit that. So let's see what happens. Okay, so we actually just hit that right here. So let's see what happens. Are we going to get stopped out at break even or no? Okay, so looks like the market has stopped us out right there for the break even trade. But something that has happened is very interesting. So you can see that if I delete this fair value gap that we inversed, we can see that we retested this fair value gap right here, and we also made new 5 minute fair value gap right here. So that means if we actually retest this fair value gap and not disrespect it down here, and react to the upside and inverse this fair value gap, we can enter another buy position. So let's see if that happens. Okay, so there it is, a beautiful closure, exactly what I told you guys. So we came down, retested this fair value gap, and reacted to the upside. So if we enter the market like this, stop loss we can put it somewhere right here, it's not important, and target of course the same target to the upside, and let's see how is that gonna play out to the upside. Okay, for right now it's going pretty good. Of course at this point we are already break even, we retested a lot of fair value gaps, and let's see what the market is going to give us. It's taking quite a long to play out, but let's see if it's gonna, let's see. And there it is, a full TP right there. So basically we had a break even trade, and then the market retested this fair value gap and inversed this fair value gap, and of course the same bias stays and everything stays, so we can again enter the market and target to the upside. Okay, so since you guys made it actually to the end of the video, I want to give you guys something for completely free, and that is gonna be the checklist and the playbook of this complete strategy. So if you want to claim that, first of all go down there, subscribe, like and comment, and then after that you can go to the description and you can press the link where it basically says free PDF, and all you do is just claim it for completely free. And also if you want to maybe get mentored by me one-on-one, you can click the link down there in the description and book a call and maybe check out if you are a right fit for the mentorship. And basically with all of that being said, I'm just gonna see you in the next video. Peace.